going to show you some examples now because I think it makes a lot more sense always to show people examples of what you're looking for. So basically yesterday we had this big dump to the downside. This wasn't a conventional trade, and I don't usually take shorts just because I have a lower win rate with shorts than I do with longs. If you take a look at this trade from yesterday, we've got this big 4-hour gap. If I can actually find it. This big 4-hour gap here, as you can see, which is also a 1-hour gap. Breaking down and retesting and not closing back above, telling me that we're going to be bearish on the day. Pretty obvious stuff. And then you could have seen here, if we take a look at the open, we've got this accumulation, and then we get this manipulation above, and we're rejecting out of this 1-hour and 4-hour gap here. And we have got this 5-minute inversion to the downside. That ended up working absolutely perfectly at open. This trade made loads of sense to me as well, because we had this really obvious liquidity here. This was so obviously going to get hit, in my opinion. And this actually extends all the way down here somewhere. If I can find the actual swing low that we were on about. You can see basically this goes essentially all the way down to the lows, in my opinion. Something like this. And I just knew that this was going to be so obviously hit. And then you can see, not only did we hit that, but we actually came down and hit 2 major swing lows down here. This one, which was a really obvious liquidity point, and we actually swung and hit this one as well, which is really interesting, isn't it?